Hey folks, Dan Frio here, the Mortgage Update. Happy Friday to you, TGIF. It is January 17th. So what happened today in the markets, we're going to let you know here shortly. But just great news. I got nothing but good news today. So don't go away. We'll be right back. Let's get to it. You see this number's down, so you're going to say, Dan, why are you saying it was nothing but good news today? So let's get through it. Some of the economic news in the broad scheme of things is all pointing positive, except one area, and it's the area that I keep cautious about, but I think maybe we're going to get through all this, and maybe it's just a lag because of the China deal and the Mexican-Canadian deal. Is because all that stuff was going on. We have the freight index a little bit lower. So let's basically just go what happened today. So in the markets, we had the Dow up 49, which was, I think it was up much higher during the middle of the day or beginning of the day than it ended. But the housing data is killing it. Housing starts are up 17%. That's the best number in 20 years. So I know the first thing you're going to say is, well, Dan, back in the heyday, all these houses were being built and the economy was kicking it and everything else. And then all of a sudden, kaboom, everything just blew up. I've been doing this for 32 years now. So let me tell you what happened back in those days. There were loans that were just being made that were crazy. There was people that are, I'll say waitresses, and no disrespect to waitresses, but that might be making 30, 40 grand a year. But because of the option arms and all these crazy loans out there, they can basically get 100% financing. It's stated income. So basically whatever you put down as your income, that's what you got. And it was an interest-only loan and adjustable rates. It was just it was crazy. It was just, they were bad loans. Unfortunately, then the pendulum swings the other way. And the criteria right now is pretty darn tight. So the housing market, I think it can hold it can be sustained because there's a lot of good news out there, good underwriting rules out there for that. So we have solid mortgages in the housing market. So let's now dive into some of the other areas. So basically this is saying the housing market is really taken off. And you can see it here, housing starts hot, best numbers in 20 years. What I did say is the case freight index. This is one of the things I follow in detail, and those that follow me know that I follow this. It's another bad month. But let's say there's 10 indicators, and if there's just one bad, okay, it is what it is. So let's go through some of the other things that happened or some of the other data that we have. Hold on, I just pulled it up here a second ago. And where did it go? Right here. Manufacturing is doing very, very, very well. It actually has been rising unexpectedly, the report that just came up. So let's go through some of the things we have. Employment is stable. It's not really phenomenal, but it's stable. The other thing we have is wage growth. Wage growth is doing very well. So that's good for all of the middle class. Everybody in the middle class now has more job security because of all this. And they're making more money. So what does that allow them to do? Well, the American dream, buying a home. So that's what it's allowing them to do. Record low mortgage rates helps that. I have a program to get people into their first loan or first home with 3% down, no longer 20% down. So think of it, 3% down, you have a stable job, stable economy, your wages are going up, record low mortgage rates, record low down payment programs. But again, it's a tight market. You have to have good credit. You have to have a good job. Those are the criteria that it's going to take. Not bad. So those are the areas that we're focusing on. Inflation is low, so we don't really see any interest rates going up soon. Delinquency and everything on mortgages is fine. Now you have the manufacturing number coming in okay. Everything's pointing good except the one thing I harp on is the freight index. So if you take this out of the equation, everything's good. All right, so that's that part of it. Let's see what happened in today's market. And people will make fun of me. I'm getting calls daily now, and people saying, I love your bowling alley analogy. So we follow this thing, and these are the Fibonacci levels. So if you're going to call me and give me grief, get it right. It's the Fibonacci levels. There's a floor and a peak. So we're trading right in there. There isn't anything. The China deal was signed. There's more and more pieces of that to come. But I don't think that's going to really shock the markets. The Canadian-Mexican agreement got signed, so that's all good news. The impeachment is not affecting really anything, so I won't even dive onto that area. Manufacturing is good. Wage growth is good. Employment is stable. Inflation's down. I don't really see this doing anything, but if you do a trend, let's do a short-term trend. What are we doing? We got an uptick. So for those new to the channel, what am I looking at here? Basically, I'm looking at the mortgage-backed securities market. We call it the MBSs here. This is a bond. This is an instrument that creates mortgage rates. It's not the 10-year Treasury or the 2-year Treasury or the 30-year Treasury. It's a tool or a bond called the mortgage-backed security. This is the price of a bond, and this is why we focus on this. As you pay, well, in this case, as you pay less for a bond, the higher the yield you're going to get on that bond. Okay, so just think of this as the price. You pay less for a bond, it's an investment, you're getting a higher yield, which means a higher mortgage rate. So we like this going up. And you've seen it was going up all day, and then all of a sudden it just went poof. So I think there was just profit taking in the market. So what we follow here is some trends. So let's get rid of the 200-day moving average. So this is the 100-day, 50-day, 25-day moving average of this bond. So what are we looking at here? I mean, there's a great trend. We like this trend as it's moving up. Interest rates are coming down. However, if you locked in any of these areas in December and probably October-ish, well, you probably closed on your loan by now. But just to give you some insight, rates are 1% lower on average than where we were last year at this time. So if you bought a house last year, maybe look at you're not that far into the game. Maybe look at refinancing if you can get a quarter, half, if you can get that full percent lower in your rates. Think about it. You might save 150, 200 bucks a month. Okay, let's refinance you, but do this. Keep paying the same amount that you're paying today at that 1% lower rate. You're probably going to pay off your house 5 years early. I think if you have a $1,000 house payment a month, principal and interest is probably more than that, but let's say it's $1,000 and you pay it off 5 years early. That's 60 payments. So you saved 60 payments of $1,000. $60,000 you can save. So just throwing that out there. So December numbers, this is a newsletter I put out at the end of each day. So check me out on LinkedIn, Facebook, Twitter, Instagram. I try to post this all over the place. And it says basically December housing surges to, this one says a 13-year high. And those are the numbers that I had. I didn't validate this 20-year thing on the highlights here. But I know it's a 13-year number that we're working with. So again, at that time, I was in the business. I've been doing this for 32 years. There were some really bad loans being made right there. Mortgage rates off their recent lows. Basically, that's this. We're just, as you follow these trends, we're just off a little bit from where we were. This was the low right here. This was the ultimate low for a long time, and that's just a week and a half ago. So we're still teetering right in that range. So what else? That's it for that. Market reps. I probably won't be posting on Monday. It's Martin Luther King Day. I will be working, so if you need me for anything, just reach out, give me a call, shoot me an email, shoot me something down below if you're watching this on YouTube. And please, if you would, please don't forget to give me a thumbs up, subscribe down below, click the bell, because especially if you're in the mortgage business or a realtor, so you get some alerts that I post out there. And I don't cry wolf. I only post really when I think it's necessary that you focus on what's going on. And please leave a comment also. I'd love to pick up on some of the feedback that you guys are giving me on some programs that you want me to talk about. Right now, what I'm getting a lot of hits on and a lot of calls on, I'm getting multiple calls a day on the bank statement program that I have. So if you're interested in that, check that out. Like this week, what I was trying to do at the end of each video was trying to give you some insight on maybe a different program that we have. Let's just elaborate on that a little bit. I have a bank statement program. We can use your business bank statements or your personal bank statements. Basically, it's for those who own their own business. So if you own your own business and you're having a tough time getting a mortgage because of you write off, basically everything on taxes, and then you pay your car notes through the business, so that depletes that income as well, and your credit cards and everything else, please reach out to me. I'd love to discuss those options to you. Probably half the time I can figure out a way to add back some of those deductions that you've been taking, and maybe get you qualified for a full doc program that we have. So if you're in that bank statement program, you probably know what I mean by full doc or bank statement. But I'd love to help you out if you're out there, you're a business owner. I've been speaking with people that own ice cream companies, heating and cooling, trucking companies, and such, and I've been able to help quite a bit of them. So, and they're usually, when we're done with the conversation, they're pretty surprised on the results that they can get and what they can do versus what they thought they couldn't do. So, if you'd like to reach me, again, my name is Dan Frio. I do the mortgage update every day. If you want to hear me, if you're in the Chicagoland area, you can hear me on radio live at WYLL. I'm on every weekday at 7:30 to 8 p.m. You can reach me on hear me on WIND radio in Chicago. That'll be tomorrow from 7 a.m. to 8 a.m. You can also check out themortgageupdate.net. And again, it's .net. You can get all the podcasts of every show I have and all my sponsors and everything there. And you can even apply online if you want there. But if you want to reach me direct, you can call 844-775-LOAN, which is 5626. Shoot me an email at dfrio, and Frio is FRIO, at parksidelending.com. And if you would, I'm going to shoot out a different website that I want you to go to. For some reason, the frioteam.com, there's some glitches in there, especially with the mobile apps. So if you would go to 1160, which is 1160mortgage.com, that's probably the best site to reach me at right now. They all funnel to the same place, but for some reason, there's a direct link or a forwarding link to my primary website from all these domains. And when you're going to the frioteam.com, there's a glitch there somewhere, and we're trying to work on that. So you might ask, why 1160 Mortgage? Well, I've been on AM 1160, which is a Christian radio station in Chicagoland. That's where I cut my teeth on radio and advertising, and then got a show, the Mortgage Update, and I took it off from that. And the numbers on that is 1160 AM in Chicago. So I created an 1160 Mortgage website. So thank you for watching. God bless. If you're in the Chicagoland area, the roads are bad, so watch out there. If you're throughout the rest of the country or the South, we're getting pounded here in Chicago. So enjoy your nice weather where you are. So take care. Look forward to seeing you next Monday or Tuesday. Take care. See ya. Bye.